In this video, we're going to be understanding order blocks perfectly. For most of you that don't know how to use order blocks to your own benefit, make sure you watch this video to the end, because after watching this video, you should be able to know how to use the order blocks to your own interest. Okay? And if you haven't subscribed to this channel, please make sure you subscribe to this channel and turn on the notification, because you'll be getting much more better videos every day starting from today. I'm back and I'm better, and I'm here to serve you much more better. So without wasting much of your time, let's go straight to today's topic. Now, understanding order blocks very well. The first thing you need to do is to understand what an order block is. And I have a video of it, but in this video we're going to be going over it again and again, so you could just get it much more better. So an order blocks are areas where it's believed that buyers and sellers place their orders. Okay, that's basically what an order block is. It are just areas in the market where it's meant to believe that buyers and sellers place their orders there, following what the dominant trend of the market. So if it's something you like to jot down, please make sure you jot it down so you won't forget it. Okay, so what are we trying to look for in this market? We're looking for the areas that we're going to see possible trend move in the market, and that is what an order block actually is. So before you can understand these areas very well, there are things you need to know and things you actually need to unknow. Okay, a lot of people will say after a break of structure in the market, such as this, let's say break of structure indicating a bullish move in the market, that the lowest level or the last candle that made that break of structure is your order block. Now, the truth about this is that it is not always right. Okay, this can occur and this might not occur. So for you not to be missing out on trends in the market, you absolutely need to watch this video to the end so you could understand where the order blocks really are, or where they really rely, or the levels at which you could just find these order blocks, so you don't go around missing trends or skipping trades and so on and so forth. Or rather, you place your trades and at the end of it all, the market did not pick your trade and voila, you missed out on that. Okay, so to get the perfect place where you should actually look for an order block, you need to understand how to use the Fibonacci tools to your own interest. Okay, so I have a setting for my Fibonacci tools, and if you like to see it, you could screenshot this area and you can set your own. That way, probably, or not even probability, you would actually be catching trends in the market. I can assure you 70 to 80% of the times you will be catching trends in the market. So let's get the setup for the Fibonacci so you could actually get a screenshot of it if you'd like to set yours that way. So this is how the Fibonacci looks like. As you can see, this is not your normal Fibonacci setup. Your default Fibonacci setup will actually look like this. So let's say we are applying default and it will look something like this. So this is my own special setup for Fibonacci, and I named it this. I just wrote something that it doesn't really matter, but this is the setup. Okay, now let's go back to the normal default setup. Now when you check your normal default setup and you come to your settings this way, you want to see all these lines are turned on. You can see they are on, you can see they are on, but when it comes to my own setting, I only need a little areas on the Fibonacci settings, and those are the key areas that would be important for this my special movement or special strategy I have for you. So let's go back to my voila. So we are here right now, and as we can see on the settings, we're not ticking most of those places that were on the default. So we only used this area, which I actually changed the figure to this. I will use this, I will use this. So I actually changed the figures to these settings, and these are one of the best settings. I won't actually say the most accurate setting, because There's no such thing as accuracy in trading, but these are one of the most easiest and most effective setup you could use for your Fibonacci. So you can have a screenshot of this if you like, and if you have done that, let's just go straight to the point. Now, since we already know that, we need to understand the market trend. So this video might be a little bit longer, so just relax your mind because you're going to learn a lot from this video. So understanding the trend goes a long way. The first thing you want to understand before identifying or trying to understand trend is what a retracement is. A retracement is a slowdown in the trend that helps new buyers or new sellers to place their order so that they can continue probably the dominant trend. And the next thing you want to understand is what a break of structure is and a change of character. Now, to understand a break of structure occurs when market keeps moving in a particular direction. If it keeps moving in a particular direction without breaking the existing lowest part or the existing low part of that trend, then we have a break of structure. I don't know if you understand that. Let me go over again. So I said, in a trend, if the market keep following that dominant trend and it doesn't break that low of the market, then we can call that a break of structure. Now, if that market or if that trend swings below the lowest part of the market, then we have a change of character. Now let's have a practical, or let's take a diagram on this. Okay, I said if the market keeps going this way, this is the lowest part, and it doesn't break this part, but it breaks this high, then we have a break of structure in the bullish form. And this is the lowest part. If we don't break this part but we break this other one, then we still have another break of structure. It goes on and on and on in that way. Okay, now the same thing goes to the bearish trend. If we keep having things like this, then we have a break of structure, continuous one at that, following the dominance trend of the market. Okay, the dominant trend of the market rather. Okay, now but if eventually we have something like this and we break this low, okay, if we break this low, then we have a change of character. Probably the market might go in this way or might even break this high as well. Okay, so you need to understand that as well. Then you need to understand what a consolidating market actually means. A consolidating market is when the market has refused to break a low and a high and is just in the middle of nowhere playing around. Then this is a consolidating market. Then some people will say you don't trade the consolidating market, so on and so forth. This all depends on the time frame you are trying to use. Okay, if you see a consolidating market on the 4-hour time frame, daily time frame, weekly time frame, monthly time frame, you should actually just follow the trend on your lower time frame and enjoy whatever comes out from that. But be aware that you might see series of change of character over the time, making you to lose out on the trade. But if you do have a nice strategy like the one I'm about to teach you right now, you should be able to catch some nice trends in the market, even when the market is consolidating, especially on the higher time frame. Now, this consolidation strategy doesn't really play well on the lower time frame because the liquidity is too low to make a very nice move. Okay, so without wasting much of your time, since you understand what that means, let's start spotting these things on the charts. Now, the next thing you want to also understand is what a perfect retracement is. So most of you think immediately the market goes up this way and you just see a small move, that is a retracement. Now, you could actually have this small move and the market still goes up, and you will now feel that we have a break of structure, and you start looking for trades here, and the market comes down here, grab here as a liquidity and goes this way. So we're going to be spotting out a nice retracement so you don't have this kind of situation or scenario in the market. Okay, so let's just go straight to the point. Now, to spot one of the best retracement, you need to look at, let's say you want to spot a buy retracement. Okay, now you need to look at the highest level the market has gotten to candle wise. You need to see that. So if you have this as the highest level that the market has gotten to, so let me take out a diagram. Let me take out this. Let's say we have this. So if we say this is the highest level that the market has gotten to, this candle level, okay, let's say this candle level is the highest level that the market has gotten to. So that's it. We want to see 3 more candles coming below. So if we have this one, you can see coming below, we had this fake out. We're not going to take it serious, okay? It's just a fake out. It doesn't really matter. So the major thing that matters is seeing 3 or 2 more after that fake out. You see, after this major fake out you've seen here, you know, this is a fake out. It did not follow itself serially. This candle is a fake out. We didn't see it follow itself serially, okay? We're not going to take it serious in the market. We're going to be looking at the prices not going above this again, because if it goes above this again, means the bullish or the bulls are still in the market. So we still want to see a push below this candle again. Okay, so if we see a push below this candle again, we know that okay, the bears can actually force this market down. Okay, so if we see it 2 more times below this without going above this level, then we know that the bears can, you know, the sellers can push the market downwards. Okay, so let's go over that. We have 1, 2. Okay, so this meets up to what? This whole area meets up to what? Our valid pull back in the market. So we already have a valid pullback in the market. So the whole area meets up to our valid pullback. We can see this. We can actually see this 1, 2. This, yeah, you can see this is a fake out. Okay, this add one above this. You can see we add one above this and we continue above this. Okay, so means the bulls are still here, but that doesn't really matter because we already identified from the last one. We're talking about the last one. We're not talking about what has happened inside. The major thing is from here. If we see 1, 2, 3, then anything that happens there doesn't really concern us. You understand? But like I said, if you go back to the beginning of this video, you find out that I said we're going to be looking at the last high of the market. Okay, the last high, I want to see 1, 2, 3. Fine, we already have a nice retracement. Now let's map out this region. We'll be coming back to this region in a jiffy. So I just want to show you something that looks like what, you know, I'm telling you. Now look at this region. Now look at this region. Now looking at this region, the last high is this candle. The last high is this candle. Let's map out this candle. The last high is this candle. Okay, the last high is this candle. Now after this candle, we have what? 1, 2, and 3. This came down nicely. Okay, this came down nicely without giving us any fake out or any moves that we don't want. This came down neatly. Okay, so you can have this and you can actually have this on the other side. Both of them are what? Valid. Okay, so now let's come back to this area. Now this made a valid retracement. Now before that valid retracement, we already have a break of what? Structure to this side. So this was the high, then we had this low. 1. Oh, this didn't even meet up to our sector. So this didn't meet up. So we can say, okay, this is a what? Valid high. So we started that valid high from here. So let's leave that area. It didn't meet up to our terms and conditions. So let's just focus on this area we started with. Okay, so we have this high. This is the highest level for now. So we're looking at prices going above here to form a break of structure. So what we have right now in the market is prices from here coming down to here. Okay, so as soon as prices breaks above that level, we have a break of structure. I hope you understand what happened there. So what I first explained is a retracement and a valid what? Break of structure. So the next thing we want to do is what? Look for another retracement. Now looking at this area, we have here, I'm coming, sorry, let me take that out. Take this out. So looking at here, we have here as our highest level. Then we had this retracement, 1, 2, 3, 4. You can see this is very nice. This is a nice one. So we have another what? Break of what? Structure. Now looking at this level right now, we can see that the market made a break of structure, but it didn't close with a body. It closed with a wick. Okay, if we have this kind of situation, then that area is what? Invalid. Okay, that area is invalid. Then coming down, you can see we didn't have a nice retracement there. Next thing we'll focus on is this next high. Means what just happened here is that the market is on a continuous trend up to this level. So we are still retaining this level as our lowest level. Okay, sorry I didn't tell you that earlier, but this is still our lowest level for now. Okay, so the market moves on to this area. Okay, so what are we going to be doing right now in this area? We look at this area now. We start looking for a nice retracement at this region right now. Okay, for that retracement we use the same pattern. Okay, now after that we had 1, 2, we had this fake out, we had this fake out. Wow. But now looking at this fake out, we didn't break above this area, so we are still going to be looking for a pattern inside this region. We're still going to be looking for what? A pattern inside this region that meets up to our terms and conditions. Since we didn't break above this area, then we're still going to be looking for a pattern. But if we didn't see that thing, that candle setting inside this area, then everything that happened here is still invalid. Means we're still retaining this low at this level. I hope you're understanding. This is just market structure and it's simple. Okay, so we now focus on this next area here. So we map out here. This is where we're going to start from. Now looking at this, we had 1, we had 2, we had this fake out, we have 3. Means this one meets up to our what? Terms and condition. Like I told you, if we had another one above this fake out, then the whole place is invalid. We need to look for another, structure again. Just like what I explained here, you can see here 1, 2. Then we had this fake out above it. Then we have another one above it. Let me take this out so you can see it clearly. We had 1, 2. We had this one above it. Then we have this one above it. We're not going to count this one because it went up and it came down. I'm sorry. So it went up and it came down. So everything there is what? Invalid. We're not going to count that. Okay. So it means we have a valid what? High at that level. Okay. So this is now a new high. So if we don't come down below that, then and we break that area, then we have another break of structure. So we take this to this area. This is the lowest level. It came from that high. You can see from this high we came here. This is the lowest level. So this is now the new what? Low. So if it breaks above it, then we have another what? Break of what? Structure. Now we take this last one. Where after this last one, we're going to go into what? Other blocks straight. Okay, so now I will tell you if your mentor has been teaching you the right thing or probably something that is not it. Okay, now let's map out the last high. Okay, right now we're still going high this way, high. Okay, then we came to this level. Let's come to this level right now. I'm taking everything slow and steady so you could just understand. Now at this point we had 1, we had 2. After these 2, we had this fake out and the market continue. I told you if we have a fake out, the market might just continue. Look at it here now. The market still went up to this area. Most of you will say this is a break of structure and you start looking for trades here and you might take this and you get kicked out of the market. You see, the market continues to this level. Now our new high is this level. Now from this level we have what? 1, 2, 3. Nice market structure. So we have a valid low here. So let's take this out. So this is our valid low right now. Now, did we break this level? The answer would definitely be no. Okay, so did we break above this level? The answer would definitely be yes. So we have another what? Break of structure at this point. Now let's go into other blocks straight, okay, without wasting much of your time. So let's go into other block straight. Okay, now so this is what the market has been printing lately. We have this, we have to this upside, we have this, then we have this. Okay, like I said before, I said if you see this kind of market structure or market pattern, means the market is following the dominant trend. Okay, now means our recent low is what we're going to use here as the recent low of the market. Okay, so the market has adjusted to that level. Now let's go into the other block. Most people will say the last candle that caused the other block, or that that made the other block move, is what we should call the other block area. Like I said, it is not always true. It is not always true. Now if we are going to use that, it might work in some cases and it might not work in some cases. All right, so let's go straight to the point. Now if we say the last candle, then this is the last candle, you would have missed out on this trend. Is the last candle, you would have missed out on this trend. Now if we come to this area now, we say the last candle, and this is it, you would have missed out on this trend as well. Even if you say this is the last candle, you would have still missed out on that trend as well. So like I said, it is not always what true. Okay, so you can see these two trade, you missed out on this two trade as well. Okay, and if you use the same pattern here, I think here might be favorable to you in your own interest. Here might play a better role for you, so you would have catch this trend depending on your strategy. Now let's now use my own strategy and see how it's gonna play much more better gigs in the market. Okay, so let's take all this out since we already know our lows and everything. Okay, now let's use my Fibonacci setting. Now my Fibonacci setting means if we're in a bullish trend, we take the last low down to the high. We lock it. Okay, now let's check if prices touched our point. Now we're looking at other blocks, at anything inside this range touching these lines. That is one area we're looking at other blocks is here. Then the next area we're looking at other blocks is definitely here. Now let's see, I'm coming, that was too long. Let's see if we actually tapped into the lines. Now as you can see, we tapped into those areas. You see, we tapped into those areas using my own strategy. You can see we tapped into those areas using my own strategy. You see that it is not always that strategy I told you. I used to use it before and I actually used to miss out on the market trend. Now let's take the next one, which is starting from here. I've told you the areas we are looking for other blocks. Let's take it down to this area. Let's see if we actually got those moves. And on this other side, we got it again. Now let's zoom in so that you can see that I'm not lying. You can see we got this area again nicely. Okay, now let's look at the, I think that's all we did. Okay, that's those two areas we did for now. You can see those two areas we got it. Okay, those two areas we got it. Since we had nice reversal, look at this. Let's check out this 1 2 3. Let's check out if we got nice areas there as well. We might not. Okay, this actually did not get to our area at all. It didn't even touch any of our zone. So these things happens a lot in the market, but the market is still bullish. Okay, you can see this strategy gives you a much more better other block area. Okay, so you can implement that strategy. Okay, you can implement this strategy. So with this strategy, you are getting much more better area for your other blocks. Okay, so get OB, which is other blocks, you are getting much more better areas. Okay, so let's see if we can find a bearish pattern and let's use it for a bearish pattern. If we don't see, but it's all the same. Let's see. I think the market was just trending up to here. Okay, let's take the market up to that side. I said the next one will be here. So means the next low will definitely be this area. Okay, this is the next lowest level. Let's see if our market meets up. Okay, I'm going to trend the whole of this market. So we're looking at this zone. Let's see, we have 1, 2, 3. Okay, you want to say this is a faker, but this is not, because when you look at the high of the and the low of the candle, you find it yeah and yeah. So the market is just inside, and we had this nice structure. So let's see this area nicely. So we didn't touch it, but we almost touched our zone. Almost touched our zone at this area. Almost. This happens sometimes, and we move on to the next area. Okay, we move on to the next area. Like I said, 80% perfect, nothing is 100 precisely. So our next area to look out for lows are these areas here. Okay, we have 1, 2, 3. Then let's take the market again. Let's see, we're supposed to catch this trend, hopefully. Okay, so we caught this trend. Nice one at this zone. Nice one at this zone. You can see that this is helping us to catch much more better trends. Okay, this is helping us to catch much more better trend. At least with this strategy, you should be able to catch a lot of trends and not miss out on the market. Now our next break of structure is at this range. So we are in a trending market here. Now let's look at this area. If this area meets up to our reversal, now looking at this area, we had just 1 and 2. So this area doesn't meet up to our reversal, so means the market here is still moving up. So we're looking for a nice reversal. So we're going to be looking at here. So let's see, 1, 2. No, we faked out, we went up. We had 1, 2 and 3. So this one came a little bit lower. So we start from here. So with this, you should be able to catch much more better trend. So our lows are still here, so this is invalid at that level. So let's see, we catch more better trends. You can see we caught this trend here. Then we go. So that's why I said these two levels are the best place you could actually find your break of structure as well. So it goes on and on and on and on like that. I can't, level everything for now, but this is how it goes on and on and on. And if we even look at this area, we should be able to catch much more better trends again. Let me just finish this up so you could just see as well. So we had 1, 2, 3. So let's catch the trend from this lowest level. Let's see if we cut this trend again. Okay, so we cut this last one again. So this video proves to you that the last candle that made the move is not always the other block, but the other blocks or the other block lies on the ranges of the market, the Fibonacci ranges of the market. So now you have a nice strategy, and with this video you should be able to understand what other blocks is and how to follow the market trend. Okay, so see you guys next week, and I'll be dropping much more better video. Make sure you subscribe to this channel, like and share, watch again, learn, and you should be able to practice as well. Don't forget to practice. You should be able to tag along with this. Thank you. See you guys next week.